And Microsoft closing the week back on the throne as the most valuable company. Microsoft competing with Nvidia and Apple recently, with many wondering who will hold on to the top market cap spot. For more on what investors should be looking for in the tech sector, we're bringing in Ivana Delevska, founder and CIO of Spear Invest. So lay it out for us here.
Thanks for having me, guys. So
yes.
We think that mega caps drove the first leg of this upturn this year. And as we get into the second half, we think the upturn will broaden to mid-cap stocks. So that's where we're really looking most for opportunities. We still like Nvidia. We still see a lot of upside, but we don't think it's going to be as outsized of a performer compared to the rest of our portfolio as we look into second half.
So why do you think that that is the case?
So if you look at valuation, within the mega cap sector, we've seen valuations actually expand. So while the recovery has been driven mostly by earnings, by now we're starting to see some valuation expansion as well. On the mid-cap side, we're actually, like within the software space, for example, we are actually seeing multiples close to the bottom of 2020 and 2022 when we really saw interest rates spike and the whole tech sector collapse. So multiples are still pretty depressed in that space compared to mega caps where they don't look expensive, but they're definitely much more reasonable.
Could you tell us some names here, these mid-cap names in software that you're looking at, and why you think software has been lagging the semiconductor space over the last few months?
So first of all, it does make a lot of sense that cyclicals usually lead us out of a downturn. So that's where you're going to see the first investment take place. You first need to invest in hardware. And then as you get further into the cycle, you're going to be investing in applications and tools. And that's where you really use the software to build these applications and tools. So we would expect a lag usually to occur of like 6 months to almost a year sometimes. But it has been actually very unusual, and it is driven by interest rates trickling up, that valuations have been really impacted in the software space. So the key will be to see the 10-year stabilize at a level. It doesn't really matter if it's 3.5%, 4%, or 4.5%. The key is for it just not to keep moving up. Exactly, and continue to create a headwind. So as soon as we see this stabilize, that will provide a good floor for the software stock valuation, and then it's going to come back to earnings. And then specifically about sectors, cybersecurity is one space that we're particularly excited about because fundamentals are really improving by the day. You're hearing of cyber attacks and ransomware pretty much on a daily basis of large companies getting affected. So that's the area that we're mostly focused on.
I want to get your reaction to a note that we talked about earlier, which was a downgrade of Palantir that talked about the analyst called it a gluttonous valuation, but also said that software is maybe not going to see this strength that you're talking about, in part because the Gen AI revenue huge increases for software have not really materialized. And I'm just curious to get your thoughts on that.
Well, the revenues haven't really materialized because of the lag that I was talking about before. So I think it's really going to take some time for companies. Right now, all of the investment is on the hardware side. So you see all the hyperscalers invest billions of dollars just in the hardware itself. As companies build the applications, that's when you will see the impact on the software side. I think there is a lot of thesis as the stocks haven't performed as well. A lot of people are talking about, well, will Gen AI replace all of these software tools? No, that's not how it works. You really can't build anything without cybersecurity protection, right? You really can't build anything without some of these data infrastructure tools and access to LLM models. So all of these are really important tools. They're just going to see the impact a little further into the tech recovery cycle.
Anything further downstream that you wouldn't make an investment in right now, but you're thinking, all right, in 3 years, let's take a look at this, a longer investment thesis?
So absolutely, the application layer would be the furthest out. So first we're seeing the hardware, then you see this middle layer of infrastructure, which is cybersecurity, data infrastructure. That's where we're looking to invest in for the next year. And then as you look further, you're going to see the application layer, which is actual applications.
The public-facing stuff that we know.
That's right. That's right. So this would be like beneficiaries would be companies like CRM systems that provide tools maybe that will optimize your sales force. It could be companies like Tesla that offer robots or autonomous driving. So all of these are applications of AI that have not really gained scale and are still in a little bit in a proof of concept stage.
Yeah, this is really interesting. I can say anecdotally it makes a lot of sense that they haven't seen the productivity gains yet. And Salesforce, Tesla, maybe in 3 years, get that boost. Ivana, thank you for dropping by here.